Welcome back to Bitcoin and Beyond. Today we have Muneeb from Stacks, one of the OGs in Bitcoin scaling, to talk about basically the state of things now. I mean, you guys have kind of pioneered this idea. It almost feels like we are seeing the ecosystem grow. So I'm sure that you've got a lot of opinions as well as updates on what's going on at Stacks. So welcome in, Muneeb. It's a pleasure to have you.
Awesome. Thanks so much for having me.
Yeah, man, I was just saying with Rob, like Stacks was just listed on Grayscale, and you're just saying, yeah, man, I found out on Twitter as well.
Yeah, I just found out on Twitter myself, so I had no idea it was happening.
Stacks ETF coming next.
What's the reaction to that?
I think the reaction is obviously exciting, but frankly, I personally, I think enjoy this decentralized ecosystem a lot, where stuff is happening, and I would have like no idea that it's happening, and then suddenly someone comes in and says, "Oh, did you know that this happened?" So I think I'm personally enjoying that a lot because a lot of the ecosystems aren't that decentralized. Like there's usually a single company that is like, trying to do stuff, but this aspect of Stacks is something pretty unique.
So what's the mission like it, and also what's the organizational structure for Stacks? Is it a DAO? Is it a company? Like is it how are you guys organized, and generally what's the mission?
Yeah, so I think it's a open source project, right? And I think because we did the SEC qualified offering back in the day, the flip side of that was before the mainnet launched, we really had to decentralize, right? So imagine the original labs company that was sort of like building the core protocol. It sort of like was dismantled in many ways. I mean, it still exists technically as a company, but all the early team members are like left off independently doing their own things in the ecosystem. And similarly, like, Stacks also doesn't have a large treasury. Like the initial distribution is like pretty decentralized, and no one has has access to a large pile of stacks, which is again good in some ways. Like sometimes it's challenging as well, because a lot of these projects typically have one or two very large companies with pretty large treasuries as well, and they use those treasuries in the ecosystem, which can be helpful in certain ways. I think Stacks has a sort of like a different path. So I think it's best to think of that as it's an open source project. Many different companies and developers contribute to it, and the overall, and because it's like so decentralized, I don't think it even has a mission statement. But I think the way I perceive it is that the goal here is to build the best Bitcoin out, right? Because we believe Bitcoin at the L1 can't scale to 1 billion people. Like even hundreds of millions of people would be very hard at the L1 level. So it's like, hey, how do we take Bitcoin to 1 billion people? It has to be like fast, cheap, and secure, and at the same time, we want to make Bitcoin programmable as well. Like all the interesting applications people are building in the rest of crypto, I think that can be done with BTC as well, and that's a pretty exciting idea. That idea has been around for a very long time, but I think the execution of it and actually making it a reality is where all the challenges are.
All right. Yeah. So Stacks is a Bitcoin L2, as you describe it. And we've been kind of on a mission here to like bring the Ethereum culture vibe, almost of like, okay, we need to define things. We need to understand trust assumptions. We need to figure out what's happening, and we need to like educate people on like what is going on in the space to like make sure people basically don't get wrecked. And you guys are an L2. So what, from a technical architecture, what is a Bitcoin L2 in your mind? And perhaps we can even get into kind of the differentiation between that and just a normal roll up or a side chain, and this kind of conversation here.
Yes, so I think terminology is important, and I think sometimes people can have very, very strong opinions about this. But I fundamentally am of the view that Bitcoin L2s are going to look different from Ethereum L2s from now, right? Like Ethereum is a different base layer. It is more programmable. And in some ways, I think the property that people focus a lot on is unilateral withdrawal, basically saying that a user at the L1 can ask for their funds out, right? And doesn't need to depend on anything that's happening at the L2 level. I think that's a very, very strong, very nice property. On the Bitcoin side, Lightning sort of has that property. nobody else has it. Lightning is probably the only one that has it. But the flip side of that is because Bitcoin script is so limited, that means that if your L2 is fully contained, fully described by Bitcoin script, then it's by definition going to be a pretty limited L2 as well. Right? And that's the case with Lightning. From a trust assumption perspective, again, there are certain type of attacks that are still possible, but by and large, people have unilateral withdrawal, which is a great property to have for Lightning. But I feel that applying that definition from Ethereum, because Ethereum is Turing complete at the L1 level, sort of like apples and oranges, right? Like, because there can be other types of L2s that can exist that explore different design points and that can be very useful in their own ways. And I don't think we can take those definitions from Ethereum and try to apply them directly on Bitcoin, especially when the term L2 actually started on Bitcoin. Right? This was before Ethereum. Even if you go back and look at the Blockstream work or Liquid, Liquid is a federation, but has been called the Bitcoin L2 for the longest time. So I think even culturally, historically, the term L2s have been used differently. But that also means that we should be very clear about the trust assumptions and explain to people like what those trust assumptions are and what are the things that sort of like make an L2. So let me comment on both of those things. So I think in terms of trust assumptions, on the Bitcoin side, you typically are putting in more trust in some sort of a bridge that is going from L1 to L2. Right. So on one side, you can have federations like Liquid, where there's clearly a multi-sig. You're fully trusting these people. There are no economic incentives, right? Like nobody's putting up any collateral or any capital. You're completely trusting whoever controls the multi-sig for moving the Bitcoin there. There are things like Rootstock that try to, have more sort of like clever designs where they have these like hardware multi-sigs and other protocols around it. But at the end of the day, it looks still closer to a multi-sig than anything else. On the new stack system, after the upcoming Nakamoto upgrade, we are basically looking at a threshold wallet system. So these signers can come and go, which is an interesting property, right? So you don't have to pre-select who the signers are and then just sort of like depend on them. It's an open network where the signers can come and go. So I think that itself is a good property. And the second thing is that these people have like skin in the game. So they do put up collateral. That if they misbehave, their capital is sort of like locked until they can actually process the withdrawals. So there's some skin in the game and economic incentives that these people have. But that's not the only thing we're sort of relying on in the Stacks Nakamoto release, because there's a very sort of like explicit effort in the ecosystem to bring on a lot of institutional signers. I think so far maybe 20 of them have been announced, and these are large institutions like Blockdaemon or Figment and others. Imagine like large custody providers, and that's like a very practical sort of decentralization and security, because if you get the top 30, 40 large institutions and custodians and exchanges as signers, then it's not just economic security, but it's a very decentralized network of people who have reputational risk as well. So I think until Bitcoin can have certain opcodes, this is sort of like the best you can do, and that's my view. Right? Like, so we're not going to just like sit there and wait for Bitcoin to have opcodes. We all know that that can take years, but we can try to deliver a system that is very sort of like pragmatic, commercial, works today, has very high levels of security and decentralization, and then prove to people like, look how useful Bitcoin L2s can be. And use that data to maybe upgrade Bitcoin with new opcodes at some point. And once we can get those opcodes, things the trust assumptions can be reduced. The other side, which I don't think gets enough attention in the definition of L2s, is the concept of economic alignment with Bitcoin, which I think is a very, very important thing. So to me, an L2 is a place where primarily the asset that is being used is actually BTC. So if BTC is used for paying gas fees, if BTC is the asset that is being deployed in smart contracts, and the economy is sort of like running on BTC, like that to me is actually a much more important thing practically than anything else. Because users like at the end of the day, they don't care about the technology. It's sort of like, working under the hood for them. But the economic alignment with Bitcoin, if the UX feels like, hey, I'm just using BTC on a different sort of like rails, that is going to feel more like an L2 to the user than anything else.
Got it. Yeah, that makes a lot of sense from the alignment perspective. We see and like we're coming from the Ethereum space a lot of times where we see this economic alignment to try to, both align the community as well as the incentives to bring liquidity over and make sure that everything is familiar. Adding in another gas token that is unfamiliar is just going to, add an extra step. And so it makes a lot of sense to have economic alignment. When it comes to this unilateral withdrawal, it's something that I think a lot of people want. It makes sense from like a user experience perspective and a safety perspective. But the conversation around opcodes is very contentious. But so is the conversation around multi-sigs. That's contentious too from a security perspective. And so I think a lot of people are okay and fine with the multi-sig setup that we have right now, but would like to see opcodes in the future. Why do you think opcodes are so contentious on Bitcoin? Why don't you think that they are more widely accepted to enable some more of these programmability and the unilateral withdrawal feature from L2s?
Yes, so I think Bitcoin basically has this culture to resisting change, and in many ways, it's a feature, not a bug, right? Like, so Bitcoin is very durable. Like, one of the, I think, value props of Bitcoin is that, for example, you can take like a Bitcoin software from like 2013, for example, and run it today, and it will catch up to the current block, right? Which is amazing to have, right? Like, imagine doing that on Ethereum. Ethereum has gone through proof of work to proof of stake and completely sort of like different clients in like since launch. So it doesn't have that sort of like, durability and stability that a lot of people would want to have from a store of value, from like, base money, because you don't want that to change that much. And I think this is also to reduce the security attack vector of Bitcoin as well. Like, there's a reason why, Satoshi had certain opcodes but disabled them, because the more sort of like complexity you add to the base layer, the larger the attack vector becomes. And these things are pretty real. Like, imagine Taproot, which in the grand scheme of things was a pretty small change, right? But Taproot enables ordinals and runes and all of these like new things on Bitcoin that people sort of like didn't think about, right? So even a very small change at the base layer could add a lot of complexity that you never thought of before. So that's why I think people are sort of like hesitant about these things. But that doesn't mean like Bitcoin is never going to change and evolve. Like, I think it will, but in a more slow, steady, sort of like very high bar to security testing and thinking through all of the different scenarios and so on.
I love Bitcoin history because Taproot is a great example. And I remember Bitcoin Cash and how the chain from 2 megabyte blocks to 8 megabyte blocks was such an important issue that it ended up hard forking, creating Bitcoin Cash, which is still above $1 billion in economic value sitting there on chain. And speaking of Bitcoin Cash, they have an opcode. They have OPCAT on Bitcoin Cash. And I think that's pretty interesting because it hasn't been exploited over there when theoretically there is this giant honeypot of incentives to go and poke and prod and see if there's a way to circumvent that OPCAT and exploit it for economic gain. Do you think that is at all like kind of taken notice by the Bitcoin developers that are kind of working on these opcodes?
I think it's helpful. Like, networks like Bitcoin Cash can act as sort of like a more realistic, testnet for Bitcoin. But we should also keep in mind that all of Bitcoin forks combined are probably less than 1% of economic power of Bitcoin itself, right? So the stakes aren't the same, right? Like they're barely at the same level of magnitude. So I think when doing something on Bitcoin, it's always sort of like a much bigger deal. And sometimes, people don't really pay attention. Like, I, for example, haven't paid attention to Bitcoin Cash for the longest time. So that's sort of like, yes, it's helpful, but I think it's only helpful if the economic incentives are large enough and some of the the core devs and other people are actually paying attention, right? But if it's something that's happening at a much smaller scale, not really in the spotlight, not the best sort of like hackers and developers are paying attention to it, then we don't really know that what could have been done that hasn't been done yet.
Totally makes sense. Wild to think that, $1 billion in economic value is still less than 1% of Bitcoin's economic value. And I only just came to realize that OPCAT was implemented over there when we were having another one of these Bitcoin and beyond conversations. Don't pay too much attention to Bitcoin SV or Cash or Plus, all the Bitcoin forks that are out there now. Let's like dive a little bit more into stacks and then generalize like these Bitcoin L2s as a whole. You guys have a very clear first mover advantage here. One of the first Bitcoin L2s that has been around. I'm curious, first, why did you choose to build a Bitcoin L2 rather than going like the Ethereum L2 route? And then second question, somewhat related, is like, why do you think all these Bitcoin L2s are coming online now?
Yeah. So I think for the first question, I know this was almost like a little bit contrarian a couple of years ago, but now I think more people are sort of like coming around and seeing the value of it. But I would call that like first principles thinking more than anything else. If you think about it, if you look at all these digital assets, and even compared to how gold versus silver or anything else works, right? Gold is far more precious than even silver, and after silver, there's a long drop, right? Like there's like a long tail of other things that never really gained any value as a store of value and so on. So I think if you take that model, and there's like thousands of years of history of human behavior that's captured in that model, and you try to apply that to digital assets, I think a lot of people would agree that one asset is going to become the primary store of value and sort of like the reserve currency, or at least a reserve digital currency. And I think all signs right now point to the fact that that's going to be Bitcoin. Like nothing else is even coming close, but nothing else is even trying to compete there. I think the only real competition Bitcoin has really faced is in the recent years when Ethereum was trying to be ultrasound money, and Ethereum was actually getting used as internet money. For example, people were trading NFTs with it. They were trading stable coins with it. The volumes were much more than Bitcoin. And I think that even that has lost momentum recently, right? Like people aren't treating ETH as ultrasound money, and even some of the sort of like diehard fans of Ethereum are sort of like backing off from that. And no one else is really even competing with Bitcoin for being. So if we sort of like all agree that Bitcoin is on track for being sort of like the digital money, the next question then is, what type of technology are you going to build around? Because when I look at other networks like a Solana or something else, what I see is like much better technology rails. But BTC is the better asset, right? So if you ask the reverse question, that would you bring, like there are only sort of like two scenarios, right? Like either the best form of money would end up going to these better networks, or these types of networks would get built on top of the best form of money. Right? So those are sort of like the two models. People who are building kind of like these separate networks, they sort of like believe that Bitcoin can be easily brought to these networks, and the Bitcoin network will become less relevant. And that was like sort of like the thing in the last couple of years, that Bitcoin is just a pet rock. People are going to forget about it because there were even memes like, Bitcoin is going to live as an ERC20 asset on Ethereum. Like that's one extreme end of that. And I have always been a believer on the other side, because I think the network effects around Bitcoin are so strong and technology is easy to replicate, right? Like if someone comes up with a faster consensus algorithm, I think it's much easier to implement it on top of Bitcoin than breaking the network effects of Bitcoin and sort of like going the other way.
Makes a ton of, yeah. I mean, like we tried that, like you said, we brought, wrapped Bitcoin to these other networks, and it worked. It worked to the extent that we had Bitcoin, at least something that, we called and priced like Bitcoin on these other networks, but we didn't quite have, we didn't reverse the flow and bring the technology closer to Bitcoin. And I think again, like Bitcoin Cash and these hard forks were attempts to try to adapt the network to scale, but we didn't ultimately have this technological like atmosphere around Bitcoin that allowed it to scale and allow the native asset to flourish in a very trustless way. And so now we're seeing the reverse. You guys are leading the charge. You guys were one of the first Bitcoin L2s that brought the technology to Bitcoin. Now we have a lot more L2s that are joining that charge. Do you think more people are kind of recognizing, look, we tried taking the Bitcoin asset off of the L1, moving it onto Ethereum and these other chains and interacting with it there. Why do you think that didn't work? And now we're seeing a lot of technology companies bring their technology closer to Bitcoin.
Yeah. So I think for one point to know about these networks is how I was saying that Bitcoin, not a lot of other projects are even trying to compete with Bitcoin for being money. Right? Like I think most of the new projects are basically better, sort of like crypto rails. They're like tech platforms really, and I think that place is a lot more competitive. If you look at Ethereum as a smart contract platform, they're very strong competitors to that. Like Solana comes to mind, or Avalanche or other types of projects. It's a pretty competitive space, and we have sort of seen that there's no clear winners that are emerging. Yes, Ethereum continues to have like a large market share, but we've seen how much traction Solana got just in the last 1 year and how much developer momentum they're getting. So I view that as a very competitive space. And by analogy, I do think Bitcoin L2s itself could be a pretty competitive space, because again, these are technology platforms. These are just like Stacks is a smart contract L2. I think there are other people coming in with different types of smart contract L2s, mostly EVM at this point. So I think Stacks sort of like stands out in terms of our focus on a safe programming language, but also I think we're potentially opening up to WASM and Rust type languages as well. So I think there would be some differentiation. Obviously, EVMs are sort of like the most popular thing. So there will be a lot of EVM clones as Bitcoin L2s, and they will sort of like compete with each other. But I think there's an opportunity for Stacks to stand out in attracting sort of like, high quality developers to more modern technology stacks than the EVM. EVM is pretty old at this point, and people, it's like a double-edged sword. Like, yes, it's a very widely accepted standard, but at the same time, we know the downsides as well. So I think there's an opportunity here for Stacks to sort of like stand out and show the world that, hey, there are better ways of building the technology stack on top of Bitcoin than just copy pasting EVM. Right? So I think that's how I see the landscape will evolve. I don't think that the alt L1 market is going to disappear. I think there's something very interesting there. It's already a pretty competitive market, and it will, I think, continue to be competitive. But the three big areas that I see are, one is sort of like these alt L1s. The second is actually ETH L2s. They continue to be a large market, like 80 billion or so market. And then Bitcoin L2s are probably the third largest category, but they're at the most early stage. And I think it's a very interesting place to be, because in terms of like their potential, I would argue that it's potentially a larger market than ETH L2s or even the alt L1s. And it is because Bitcoin is $1 trillion asset. Like just moving 1 or 2% of Bitcoin into these things means like tens of billions of dollars or more, and that capital is already there. It's already sort of like sitting there and can easily be made productive. So that market is at a very, very early stage, and I think that's why we're seeing so much interest, because so many projects are starting in. It's finally clicking to people that, hey, this is a very interesting area to come and build in, and it's very fundamental. Like Bitcoin is just not going away. Someone's going to do it at some point, right? Like that a lot of people will just agree with you that someone will figure out how to have a really good, fast L2 that has a great UX on Bitcoin, and they will be able to move a lot of easy capital. So a lot of competition is sort of like coming in right now, trying to kind of like take their attempt at that.
And when we're moving that capital, we're moving Bitcoin. Do you think the primary use case for that Bitcoin transaction, that movement, is going to be payments, merchants using Bitcoin to pay for a cup of coffee? Or do you think it's going to be like higher value types of transactions, more like Wall Street-esque types of DeFi lending and borrowing, money market types of transactions?
Yeah, I think Bitcoin as collateral, my guess is would be the initial use cases, because people don't want to sell their Bitcoin, but Bitcoin doesn't give you any yields right now. And compared to every other digital asset, right? Like if you hold Ethereum, it's very sort of like easy to deploy it and earn yields on that. Same with Solana and other assets as well. So Bitcoin is like obviously the number one digital asset. People still gravitate towards it, but they do feel, if you talk to anyone who owns like large amounts of Bitcoin, the number one thing that's on their mind is, okay, I have like Bitcoin, but how do I earn any yield? Which is very natural. Like imagine anyone who has fiat money as well. Sort of like the first thing that you want to do is, okay, how do I make it productive or earn some sort of a monthly income on it, instead of just keeping it where it's not earning anything at all. So I think that's a very fundamental problem for Bitcoin. It's a pretty good use case for Bitcoin as well. Like Bitcoin as collateral for other things, for DeFi, actually makes a lot of sense. And I think with these L2s, I do think some of the base use cases for Bitcoin as like, a better payment rails, because Lightning was really the only project attempting that. And Lightning has seen some traction, but some routing and liquidity issues sort of like continue to be there for the Lightning network. So I think with all these different L2s coming in and exploring different designs, I think it's entirely possible that the Bitcoin as base payments use case sees a revival, and people are able to just do Bitcoin payments over different L2s. And I think we'll see like which ones actually start getting more traction and so on. But in general, I think it's a very very healthy thing for the Bitcoin ecosystem.
Yeah, it makes sense now why Lightning didn't really work, because it didn't quite get at the number one use case that you talk about with collateralizing Bitcoin, the asset. Lightning allows us to make payment channels, transfer Bitcoin relatively seamlessly, but we can't collateralize, we can't earn yield. And that is sort of like the number one thing that people want to do with their Bitcoin now. And as you were talking, I was starting to draw some parallels between Bitcoin and gold, as I think it is pretty typical to do. But like some things that came to mind is that, when we have some gold now, I think it is pretty typical to collateralize it, right? I think there is a market for that. But then the other thing that people like to do with gold is they like to wear it as jewelry. It's like more functional. And now we're starting to see some of these Bitcoin L2s incorporate Bitcoin as a collateral asset that's like crypto economically secures their roll up or their network. It's a pretty rough analogy to equate that to how like people wear gold. There is almost like a collateral for their status. But for the most part, how do you see that playing out with these Bitcoin L2s that have more of a proof of stake mechanism, and they use Bitcoin as their economic security?
So I think the Bitcoin analogy with gold is actually pretty accurate in many ways, right? So for example, if Bitcoin starts becoming sort of like a collateral or even stable coins, that would be a situation that is very similar to how our currencies used to be backed by gold. And I think that's a very sort of like a natural thing that might happen. And then in terms of other purposes of gold, like let's say people create jewelry out of it, I think the reason why that jewelry is sort of like perceived as valuable or is more expensive is because gold itself is precious, right? And I think that makes a lot of sense when we talk about Bitcoin NFTs, where you're taking something precious and actually are using that to inscribe something. So I think Bitcoin NFTs are sort of like that. Like it's like an art form. You're using something that is very precious, and you are then inscribing other things with it. And I think that has value, versus taking an asset that has no value out in the market or very little value and trying to do the same thing with it. I think people are always going to perceive the Bitcoin-based NFTs to be more valuable. Like that's sort of like my theory. I think so. Bitcoin as gold also makes a lot of sense. The difference here is that, it's very hard to use very small amounts of gold, and gold is not programmable, right? So that's why I think Bitcoin is actually a far superior asset than gold, because people can program it, people can actually use very, very small amounts of it, which means that Bitcoin does have a shot of doing payments as well, whereas gold never had a shot of doing that. And I think that's a very sort of like exciting place to be. And in terms of like, sometimes people ask me about, do you think Bitcoin is undervalued or what's going to happen? And I think the simplest model is that right now Bitcoin is barely like 10% of gold's market. And if you truly believe that this is a better collateral, this is a better sort of like, store of value, then that means we're very, very early. Bitcoin should at least be worth more than gold.
Yeah, and that's always the thing that gets me and my friends is like, you can just kind of jump on a plane with the stick in your luggage, and sometimes they ask you like, hey, are you traveling with more than $10,000 in international flights? And just check the box that says no. Maybe we won't post that, but I think that we just will, because, well, this is the way. And like, I mean, that's kind of like the mindset, right? It's just like Bitcoin, the transferability, and it brings that level of kind of like asset class, which isn't really seen in gold. But like when I think of gold, I just think of like having this kind of hard asset that I just don't want to ever touch. I just kind of bury it away in a safe or something. And I tend to think that like Bitcoin, a lot of people think of Bitcoin like that as well. And so I kind of like push back on the idea that people would want Bitcoin for yield. The other idea of this kind of like Bitcoin users wanting to take more risk. So like with that perspective kind of being shared, and that's kind of like where I stand. But I've been provenly wrong on this now, because like we just had a conversation with CoreDAO. They've got thousands of Bitcoin staked. You've got Stacks. You've got all these L2 with people kind of bringing Bitcoin in. But I still think there's at least a majority population of Bitcoin holders who are like, no, just like hard no. So like the question that I'm getting to is like, what do you think the user like subsets are of Bitcoin holders, and when it comes like their desire for risk, or their desire to like go do things, like like what kind of percentages maybe, or kind of how do you look at like the entire holder base and be like, okay, with Stacks, here's kind of who we're going after, here's who we may never be able to onboard, or kind of like how do you approach this?
Yeah, so I think the first thing about people not wanting to risk their Bitcoin, I think yes, it is true, but I would divide that as a lot of early Bitcoiners, for example, they would use this 80-20 principle. That take 80% of your Bitcoin, put it in cold storage, forget about it, and never touch it. But have some for experimentation. Go and play around, and throw it at things and see how it works. Interestingly, even if you apply that rule to the Bitcoin market cap, like if Bitcoin is north of $1 trillion, even 20% of capital is a lot. It's hundreds of billions of dollars that's there. And I think we have real data that Bitcoiners do participate in things. I'll give you some examples. People forgot, like, the original Ethereum ICO, I participated in it. It was 100% Bitcoin based. Like Bitcoiners actually funded Ethereum back in the day. It was 100% BTC based fundraise. I think Tezos was the same. I think it was mostly Bitcoin back in the day. And Rootstock, which happened some years ago, people forget that I think there's something like 35,000 BTC came into the initial funding of Rootstock, and that's a lot of capital. And we have seen this with NFTs as well, like Bitcoin, like ordinals. All people are using BTC to buy these things, right? So we have real on-chain data that says that Bitcoiners spend money on things when there is an opportunity to do it. And yes, that doesn't mean they're spending all of their money. I think the risk appetite might be different. I think people do keep a bunch of their Bitcoin in cold storage, me included. And I think that's how I see L1 and L2s as well, right? Like I do think most of the Bitcoin on L1 would be cold storage type Bitcoin. And then whenever you want to do something productive, you want to earn yields, you would go to L2, but that's like it's coming from a different pocket, right? Like it's sort of like your checking account and not sort of like your savings account.
Yeah, it's kind of how I'm looking at it as well. And I think that this movement has probably, while those who choose not to participate from the L1 level, who are just kind of that core like 80%, if you will, or at least within their own personal holdings, that the 80-20 rule. You ought to think that they are probably maybe a little bit upset when they go to send transactions and the fees are a little bit higher, but you ought to think that they're probably pretty happy about these developments given the extensiveness of the longevity of Bitcoin's basically security model from what you guys are doing at Stacks and all these different L2s and just basically contributing to the fees on the L1.
Yeah, I think Bitcoin fees were, I always thought that they were surprisingly low, like given how precious Bitcoin's block space is. And I'm mentally prepared for even much higher fee environments in the future. And that's going to be, in some ways, like I think earlier you guys asked the question that, hey, why are the L2s happening now? I think it's a combination of a few things. One of them is the increase in fees due to ordinals and other activity on chain. Because before that, I think L2s were sort of like a nice to have. That, hey, why don't we go to an L2 and go and use it? When Bitcoin fees start spiking, like imagine you want to do like $100 worth of BTC transfer, and now the fee is $40 to $50, right? At that point, it becomes a pain point when L2s become almost like a medicine to a real pain that a lot of people are feeling, and it becomes very clear that, hey, we have to go and build these things. So I think that some of those factors also contributed to it just becoming like very, very clear to everyone that L1 is not going to scale. It's going to be very painful to do transactions on the L1, and we really badly need the L2s.
Yeah. At what point is it contradictory though? Like, at what point is ensuring the longevity of Bitcoin and making sure miners are profitable and sticking around and keeping the hash rate steadily increasing or at a solid amount? Like, at what point is that contradictory to like too many fees, L1's unusable, and you can't, it doesn't make sense to like keep increasing the amount of fees on the network?
Yeah, I think I tend to think of these things as like free markets doing their thing, right? Like if the fees become so like too much, people will try to figure out other solutions, right? So it's like the demand might adjust in certain ways, and it might come back to a level that is sort of like sustainable. And we've seen that, right? Like fees aren't like they're higher than before, but they're not consistently higher, right? And so they sort of like fluctuate a little bit. But I also think that we are in very, very early days as well. So I tell most people that you should be mentally prepared that most of the time you will be transacting on L2s, and those L2s might settle back on Bitcoin. So that's another thing that we were talking about earlier about definition of L2s, where a lot of emphasis in Ethereum, for example, is on the unilateral withdrawal. One property that I personally find very interesting is basically the reorg resistance, which means that if you have an L2, Stacks has that with the upcoming Nakamoto upgrade. So let's say you do a transaction on the L2. Let's say you were transferring BTC, L2 BTC on the L2. Once a Bitcoin block comes, Stacks will have 100% of Bitcoin finality, meaning that if someone wants to reverse that transaction, they have to go and actually reorg the Bitcoin L1, which I think is a huge, huge benefit, because there's no opt-in from miners, there are no changes to Bitcoin, but now 100% of Bitcoin hash power is being used to secure an additional net, almost for free, right? And I think that's a very powerful thing, because it helps sort of like scale Bitcoin security. Like you're reusing Bitcoin security, but you're reusing it in a way that's like very practical, and no miner opt-in is required, and users are just like benefiting from that level of security by default. So, and that I think is a very strong property for the security of an L2. You are now secured by 100% of Bitcoin hash power.
Gotcha. Okay. So that makes it more like it makes Stacks more equivalent to like the L1 almost in terms of like the rules of the reorg.
Yes.
It becomes like equivalent.
Yes. So I think if Bitcoin is the gas asset, if your reorg resistance is 100% of Bitcoin, right? Then the UX that the users are having is that instead of doing a L1 BTC transfer, they can actually try to do a L2 transfer, where it's cheaper, it's faster, they get fast confirmations, which are L2 internal. right? And that has its own security budget. Let's say, $1.2 billion was locked in Stacks recently. So that $1.2 billion is signing off on the fast transaction. But as soon as a Bitcoin block comes, now you are at 100% of Bitcoin hash power security, which is really interesting. So yes, the trust assumption is that when I moved my BTC in, I'm sort of trusting this decentralized network of signers to do the right thing. But if you squint your eyes, what are you trusting when you're transacting on Ethereum or Solana? You are trusting a decentralized group of signers, right, who have economic incentives to do the right thing. And that's exactly the thing over here as well, that you're trusting a decentralized group of signers who have an economic incentive to do the right thing if you want to bring your L2 BTC back to L1.
Gotcha. Yeah, it's like the closest thing that we've heard so far, basically, to like secure scaling of Bitcoin. So great work. Two things left from me. I don't know if Rob's got more. We saw you at the modular versus monolithic one last debate. I think you were representing Bitcoin, which is like inherently monolithic as an L1, but that's like ironic that you're building stacks, which is like modularizing Bitcoin and scaling it. So like, what is your stance on Bitcoin being like monolithic and trending towards modular? Is that like an accurate statement as to like what's kind of going down?
Yeah. So I think on that sort of like debate, I am of the view that there are certain things that will become modular for sure, and they make a lot of sense. Like we just talked about Bitcoin security. Like if, let's say, all Bitcoin L2s start using a stacks-like security model, that means that someone can launch a new network and be secured by 100% of Bitcoin hash power. And that's amazing, right? Like imagine the other alt L1s when they launch, even if they launch at like a very high 10 billion market cap, it's sort of like nothing compared to Bitcoin security, right? So in some ways, like that's making Bitcoin security reusable in a very modular way, and I think that's great to have. I think the place where I feel like the more monolithic designs like Solana have an advantage is really about the UX. And in the end, I think the UX really matters for users. So if you have fragmentation of liquidity, if you have fragmentation of like all these bridges and it's like a UX nightmare to move things around, I do think it makes things worse. So I wouldn't be surprised that if in the short term, more monolithic designs that are heavily focused on the UX actually gain some traction, while certain modules mature more and they become almost like seamless to integrate. Right? So I guess what I'm saying is short term, I might see more monolithic designs actually getting more traction. And in the long term, I do think that the modules will become seamless enough and mature enough that people would be able to sort of like remix them in ways that are sort of like less visible to the user. And until we can get there, I think it remains a challenge for how to have these modular things and not impact the UX.
Yeah, I agree. I think that was a statement at the event as well. It was like all the monolithic people were shifting towards the modular camp, and all the modular camp people were shifting towards monolithic. It was too diplomatic. We needed some more spiciness there. But yeah, Muneeb, it's been a pleasure, man. Thank you for coming on it and joining us. I really appreciate your insights.
Absolutely. No, thanks for having me. It's a great time to talk about Bitcoin.
Yeah, it
Definitely.
is. Muneeb, I got one more question for you, more like an economics question. So we talked about the relationship between Bitcoin and gold, and the gold standard that the U.S. dollar was on for a while. There's a website called like What the Fuck Happened in 1971. I don't know if you're familiar with it, but it talks about like why did we like go off the gold standard at that time? And so I'm actually toying with this idea now. Like, do you think we will end up hardening the currency that's out there and kind of returning to a standard on Bitcoin at all? Or do you think like the current economic situation is almost like spiraling out of control with debt? And what is the end result of that?
I think my sort of like most optimistic view is that if you look at the reserve currency status of the US. It's entirely possible that's not threatened for a very long time. But if it is threatened, I think the sort of like more rational thing to do would be to jump to something that is more neutral than to try to switch to a currency of another country like China or something else. Right? So it's very interesting that Bitcoin might feel initially more threatening, but in the end, it's actually not that threatening because it's a very neutral place. And a lot of miners, for example, now Bitcoin miners are in the US. The US government actually already owns a lot of Bitcoin through various historical reasons and whatnot. And I think recently we've started seeing some shift in the attitude towards the crypto industry as well. So I think if that trend continues, Bitcoin as a neutral technology, just like the internet was a neutral technology, is a much better fit into the US economy than a foreign currency, which is almost like impossible to imagine that there is a foreign sort of like reserve currency other than the dollar. And then the US is trying to play in that market. Whereas with a neutral sort of like technology like Bitcoin, I think that's much more likely.
Awesome. That's an interesting take. And I think even more so than ever, we're seeing that neutrality come into play politically and geopolitically all around the world. Awesome, Muneeb. Thanks for coming on. Very insightful. Appreciate it.
All right. Awesome. Thanks so much. Take care.